Hi, this is Kerry Artek with Wicked Stocks, bringing you an update really on the S&P 500 index. I'm calling it the broader outlook, which to me means the next several weeks to the next several months out sort of analysis. It's not day to day. I did record this the week of Thursday, March 24th, 2022. As far as day to day goes, just know that I do provide the daily SPY report, daily SPY, the S&P 500 Spider ETF, the daily Triple Q report, that is the NASDAQ 100 ETF. Both are daily 5 to 10 minute videos covering a detailed analysis of both of those ETFs that are correlated with these broader indexes. And I invite you to take a look at those. Actually, subscribe. You can go to wickedstocks.com, become a premium member. Until the end of the month, we've got half off. And you just, in the coupon code, type in all caps the single phrase half off, HALFOFF, and you'll get half off for your first month. They're only $25 a month each, and if you combine the two, they're $40. We'll also put out the weekly DIA, the Dow Jones Industrial Average, the weekly IWM, the Russell 2000, the weekly Bitcoin, and 2 stock picks a week, in addition to the free stock pick that we put out every week on YouTube. And by the way, on Monday, we put out an NVIDIA analysis, if you haven't seen that already. One of the reasons I'm putting this out here right now is I realize I only put out one item on YouTube this week. That's as low as we've gone since October. So we do plan to put out regular content, but I just want you to know that we are churning stuff out on a daily basis and providing our paid clientele with timely analysis in both the SPY and the Triple Q on a daily basis, and longer term, weekly, week by week, DIA, IWM, Bitcoin. I invite you to check it out. Check it out for a month. $12.50. It'll get you at least one of those, and $25, half off the $50 full subscription for everything. Everything we produce, everything I just mentioned, is $50 a month, and you'll have half off that your first month. So I invite you to come on board and have a look-see. But nonetheless, I do appreciate your attention this very moment, and I promise you the next 5 or 10 minutes will provide you decent analysis for the S&P 500 underlying index. So the last time I recorded one of these was a month ago, and the week before, which is that spike low, we dropped to right around 1% of long-term support. These are all weekly bar charts, by the way, and this is the S&P 500 index, the cash index itself. And so we came close to testing long-term support. Those line studies below the market, one is just an extreme, just a channel bottom that you can see based on the trend lines across the tops. The other is a rising 1/3 speed line, speed resistance line. If you're not familiar, well, I'm not going to, I do sometimes construct them, and I show how they're constructed in some of my other videos, but not here. It is just it's a 1/3 speed line, and they're both trend defining. They're both 2 years in the making. They're both trend defining over the longer term time frame, and above which the S&P 500 remains bullish through the year above it. And we came very close to testing it about a month ago, and since then. Here's the next slide. I always jump the gun here on these slides. This slide is important because in the video that I showed on the week of February 28th, I mentioned how we have a new set of channel tops coming down based on the low from the week of February 22nd, the week earlier. And these channel tops we are now in the middle of. In fact, we are testing the top one as of Thursday. We pushed to, we're right there. I mean, the high is 4520.58. And that channel top is 4521.70. It is a formation that just might contain buying into, possibly through April trade. And from here, we could fall back to 4100.65 to the 4169.98 channel bottom combination 1/3 speed line. Those numbers, by the way, are the bottom numbers are actually next week. Just so you know, I probably should have labeled that, but they are for the week of March 28th. The numbers above, 4428.07 and 4521.70, they are for this week. I'm going to give you next week's as well for those. But this formation, this band of resistance, could contain buying into April. This rally, in part, now I want to jump into crude oil just a little bit because there's still a pretty tight inverse correlation between the two. There's a lot of inflationary sensitivity right now, and I don't think that's going to stick and hold as tightly as it has been. It's going to sort of decouple over time, I suspect. There always will be sort of a general inverse, especially during extreme times. But let's take a look at West Texas Intermediate. This is the crude oil chart, futures market. This is now reflecting the May 22 contract, which is the front month. So that's the one you'll hear about in CNBC and so forth. So how do I describe this chart? This is a weekly chart going back to 2008. You can see the 2008 high of 147.27. But if I could kind of describe what happened over the last month and a half, for a number of weeks, 4 or 5 weeks, we were testing that 91.90 to 92.45 area. That is a channel top that you can see that is about 13 years in the making, and a descending 2/3 speed line. They all come together in the 91.90 to 92.45 area, and we're pushing into it, and it held, no dramatic downside pullback. And then, the Ukrainian situation was building up, and then there was a week where we gapped above it, and we took off, and that was the Ukrainian invasion. And in that first week, we rallied up to that 114.80 descending channel top. That is the number for this week. I'm going to give you next week's in a moment as well. And we broke back. We came back and settled just above 114.80, that channel top, but not by a 1% margin, which is important for longer-term studies. So the following week, we put out the 130.50 high. We came falling all the way back into the lower 90s last week. So we have had about almost a $40 a barrel swing in the last 3 weeks off that 130.50 high. The following week, we dropped to within 1% of that 91.90 to 92.45 area. What you're seeing here is, in my opinion, these are the major pivot points longer term for crude oil right now. We've got long-term support in the low 90s, 91.90, 92.45. That is an area that just might contain selling into later year, and above which the momentum of this rally remains intact. We can push on beyond that 130.50 high, perhaps up to 147.27. I don't know about any higher than that, but that's possible too. But I do think the parameters here are 92 floor, 147.27 ceiling, and there's a significant pivot point inside there at 114.80. We tested the 114.80 area later this week. And I think that, if we are to close above 114.80 on Friday, and we're not far off it, and we're a few dollars off of that area. If we close above 114.80, by a 1% margin, which is 115.95 on Friday, March 25th, or higher, then we enter another significant phase of buying, where over the next few weeks we should actually reach that 147.27. And I can't help but think that if that scenario does play out, that the channel tops that are presently being tested in the S&P 500 are very well may hold. I mean, we'll have to see how this all plays out. And inversely, of course, having just tested that 114.80 area, we can, over the next couple of weeks, fall back into the low 90s again. And I think under that scenario, we get the buy signal in the S&P above these descending channel tops. So I'm just going to throw that out there, food for thought. You can rewind, hold the image if you want to, but I'm going to move on. Actually, I'm going to show you next week's levels. So what was at 114.80 this week is next week 114.76. Big pivot point. That 91.90, 92.45 area pretty much holds the same, but 114.76, if we close above it by a 1% margin, off to the races again. We should test that 147.27 high within just, I think, a few weeks with this kind of volatility. Until then, we can fall back into the low 90s. And by the way, if we do manage to close below 91.90 in the coming weeks, and I don't see it happening with what's happening in the world, but if so, good high for the year, and we should give much of this back as we continue into later year. So this is the structure. These are next week's numbers, actually. But this week, once again, is 45.21.70. This is a big level for Friday, March 25th. If we hold below it, we can ease back, and over the next 3 to 5 weeks, fall into the lower 4,100 area once again, where we encounter long-term support able to contain annual selling pressures. And I will add, if you're looking at this image, that if we close Friday, March 25th, below 44.28.07, and that doesn't look likely right now, but it may well happen. And if so, then I think we are very likely going to fall into the 4100, low 41 handle, and probably within just a week or two. This is the scenario, by the way, where crude oil closes above that 114.80 level by a 1% margin, and that induces sort of selling pressures in the S&P because everybody and their uncle can see that we're likely to rally, another what would they be? Another $30 to $35 a barrel over the next few weeks. And let's talk about the possibility. Let's take a look at actually next week's numbers. I might as well give these two as well. 44.0108 to 44.9171. So you can see that the channels have dropped from 45.2170 today, and next week the channel top is 44.91.71. And if we close above it, if we settle Friday, March 25th, above 45.2170, or if we settle Friday, and if we don't do that, then if we settle Friday, April 1st, above 44.91.71, then we enter a continued rally. The market continues to rally to those old highs, and that's at 48.1862. That was the January all-time high. And so I think that would be about a 3 to 5 week move. If we close today, March 25th, above 45.2170, over the next 3 to 5 weeks, I think 48.1862 is likely a retest of that high. What I do like about that as well is there's a former channel bottom that you can see that is parallel with the structure at 4100.65 that next week is at this week is at 4733.41, but by the end of April it converges with that high right around 4818.62. And so the timing, 3 to 5 weeks, last week of April, I know it sort of fits a perfect scenario, and they rarely play out this way. But I think this is a pretty good scenario where if we close today, March 25th, above 45.2175, we have a 3 to 5 week move into that low 4800 area, 4818.62, where we can top out for at least a week, maybe a month or two, and fall off. But I do think that over time, given the fact that we essentially tested long-term support about a month and a half ago, and coupled with the fact that we'd have a buy signal above 45.2170, and the fact that the long-term trend remains clearly bullish over the 2-year time frame, that if we close today, March 25th, above 45.2170, it may well look like this, where we top out for a spell in the low 4800, double top, back off a bit, and then resume and push on beyond that high and up to the channel top that is presently 5137.22 and rising. I mean, just looking at this chart, you can see later in the year it'll be 5,500 plus by the third quarter and fourth quarter. And so I think that this is kind of realistic. Now, I'm not saying that just by closing above 4521.70, we're going to rally another 1,000 points in the S&P, but we may well, and I think that is kind of what these charts are suggesting as a very clear possibility. So I'm going to leave you with this chart, which is today's levels. Actually, I'm going to leave you with the next chart. There's one more to go. But this chart are today's levels, the week of March 21st. And because this is only going out on the 24th, and you'll only be seeing this on the 25th when it's relevant, these are the numbers for Friday, March 25th. And those channel tops drop to 4491.71, the channel top itself, the mid-band of 4401.08. And once again, I'll just underscore that if we close Friday, March 25th, above 4521.70, we've got a meaningful buy signal really through April, but I think ultimately this thing could play out into later year. And inversely, if we close Friday, March 25th, below 4428.07, then we should fall back and retest low 4100 handle long-term support. And that is all I've got to say. Almost 14 minutes in this, and I appreciate you sticking with me so far. Please go to wickedstocks.com. Sign up for that membership. You won't regret it. You can cancel at any time. You get half off your first month, and you'll get this analysis, the same quality, on a day-by-day basis in the Daily SPY Report and the Daily Triple Q and weekly DIA, IWM, and Bitcoin, and 2 private stock picks a week, in addition to the 1 free that we put out on YouTube every week. So have at it. Thanks for watching, and we'll talk soon.